There's quite a bit of chat at the moment around the corporate tax rate decreasing, or effectively the company tax rate. Now, the idea is to then attract businesses into New Zealand that are international. When they come here, they set up base and they're attracted by the fact that their tax rates would be lower in this jurisdiction. But remember that hundreds of thousands of businesses in New Zealand trade through a company. So there's some SME business owners at the moment getting excited by the fact that maybe they're going to end up with a lower tax rate. Now, I just want to step you through this so that you better understand it. Remember that when we're taxed in a company, it's effectively an intermediary tax. So eventually those profits need to pass to somebody. And who do they pass to? The shareholder. Now, a bulk of the SME businesses in New Zealand are run by one person, so one shareholder, or they're run by partner and wife or a couple of business owners. So let's just step through a couple of examples so you can truly understand how this may not impact a SME business too much. However, it could help some businesses pay less tax. So at the moment, a company gets taxed at 28%. Now, what do business owners want to do in the SME world? Well, the mum and the dad, or the young person coming up, or the two business partners, they normally want to extract all of the profits out of the company so that they can spend it. What do they spend it on? Probably servicing their life, because they've taken on a shitload of debt and they need to pay that debt. So they want to extract all of that out. So a lot of Kiwi businesses don't actually reinvest back into their business the way that the media will talk about companies and corporates being able to do more of that, because the tax rate will be lower. So at the moment, let's say they make $100,000 in profit and they get taxed at 28%, they'd have $28,000 of tax to pay. Now, people who don't understand tax would be like, oh, that's bullshit. Companies pay way less tax than individuals. But again, what ends up happening with that profit? Well, eventually it must be passed out to the individual shareholders. So normally, for a lot of Kiwi businesses, and this is general and this is not right for everybody, but normally the profits of the company will be dispersed out and distributed out either via shareholder salary or a PAYE salary, so that the company actually has no profit, and the shareholder will pay the tax at their marginal tax rates, just like employees, just like everybody else. Now, of course, even if a company doesn't do that and they stack up some of their profits, and we call that retained earnings, and they're only paying 28% tax on it, and that's the flat rate across those profits, eventually those business owners are going to say, well, we want a dividend, which is the same thing. We're distributing the profit back out to the shareholders. Who are the shareholders? The one person, the mum, the dad, the two business partners. And where do those dividends go? Oh, they go into the marginal tax rate. So sometimes what we'll see is accountants will tell their clients, oh, we're saving you tax, we've left all the profit in the company, or we've distributed a salary, but the rest of it's staying in the company and it's left behind in there. And people are like, oh, great, I've got an awesome accountant. And then the retained earnings, they back up, and they build up, and then eventually they're like, oh, we need to distribute a dividend because you're overdrawing your shareholder current account. Now, that deserves its own video, but basically there are rules about how much money you can and can't take out of your business. Now, as soon as you start to take out more than what you're supposed to, you effectively have to register on paper interest to reflect the fact that you've taken out more. So you've got access to the use of that. So then you have to reflect the fact that you're paying interest back to the company. And we do that via a journal in most cases. So we're putting it onto paper, but that creates revenue and that creates more tax to pay. So eventually the accountant says, well, we better do a dividend. And guess what? That goes into your tax return, like we say, but you've already paid 28% tax. Oh, but you're also profitable in this year. Therefore, we need to top this up. You need to pay another 5% in tax, or maybe even 11% if you're in the top tax bracket and earning over $180,000. You've now got to pay tax at 39 cents in the dollar. So you haven't saved yourself tax, you've delayed yourself when you will pay that final tax. Again, there are extraordinary circumstances or outliers where this won't be necessarily entirely accurate, but for the bulk of people, this is what's actually happening for them. But people will be reading these stories in the media thinking that, oh wow, you know, these companies and these SMEs are going to end up paying way less tax. This is so unfair. So if we go back to the example, now let's say they drop the company tax rate to 20%. Well, now on that $100,000 of profit, if they just keep it in the company, they're going to pay $20,000 in tax. But again, eventually they're still going to want to distribute that profit out. What happens with the profit? It goes into the individual shareholders' tax returns. What will they get taxed at? They'll get taxed at their marginal tax rate. So eventually that will get taxed at 33, 30, 39, depending on how they're going. So there's a lot of people getting excited at the moment about how they're going to save heaps on tax, and there's a lot of people who don't understand tax that are getting riled up about how business owners are going to get a massive advantage, and this is bullshit. Why should they be taxed less? And that's probably, again, another video. Well, maybe they deserve to, because of the people that they're hiring, the things that they're creating, the innovation that they're doing, the problems that they're solving in the market, and the risk that they're taking. But people don't think like that, do they? No, they think, oh, business, greedy, corporates, oh shit, they're ruining people's lives, exploiting people. Oh, easy to say when you're not building something yourself nor doing anything. But again, let's not go down that tangent. So just be mindful when you do start to see some of these articles around corporate tax rates and things like that. You know, it's not going to have the big impact for the SME community as maybe what you're thinking that it may. Now, it's different for the big corporates, and the largest corporate taxpayer in New Zealand is ANZ. So it'll make a big difference for them. And let's think about that. If the largest corporate taxpayer in New Zealand is told that they have to pay less tax, do you really think that the public are going to allow that to happen? Banks are one of the most hated entities in the country. If the narrative is, hang on, are you telling me ANZ, Westpac, ASB, etc., those organisations that are paying tax in New Zealand, they're now going to get a tax cut? Are you serious? I personally couldn't see that happening, because I think that too many people in New Zealand would be like, that is bullshit, that is so unfair, I'm not voting for that. Why is my life still tough? Why am I still paying high taxes? And those big corporates are going to have to pay less. So I couldn't see it going through, but I could be wrong. But let's watch the space.